Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom episode number 26. So, we've had a few weeks off, been traveling in Europe, and it's been a great time for me, but it's now time to get back into reviewing what's happening in the news and showing you the story behind the story and how that is impacting or can impact your wealth creation and money management. So today, in a theme that's been running across all week for the Investors Way, we're looking at this headline that the ASX bounces higher after inflation eases. So I wanted to have a look at this for a couple of reasons. There's a couple of stories in here that are trying to explain why the ASX is going higher, which is not necessarily the key thing I want to talk about, but more so this second half, which is about the inflation data. And I'm going to link this statement to what we're hearing and what I talked about earlier to this week in my Facebook group or Facebook page, about some of the people who are predicting the stock market is going to crash sometime soon. So this article just pretty much is looking at what had happened the day before in the stock market and the third day in a row of rises. And like most journalists will do when they're commentating on the stock market, they want to be able to pin it on something. Whether it goes up or down, they want to be able to say it's because of this one thing. And if you followed me for any length of time, you'll know that the stock market doesn't go up or down based on one thing. There's multiple things going on every day that are driving what's going on at the stock market, like the company results and all types of things. But in this case, the journalist seems to be suggesting that because the US went up the night before and we had some good data in relation to inflation here in Australia, then that's what drove the market up. And there may be some element of truth to that, but as we know, the market does its thing based on a whole host of other pieces of information and data that's released on a particular day. Whilst it might trigger a movement one way or the other, it's not really the reason that the market is moving. But let's take joy from the fact that once again the Aussie market's heading up. At this point it said 7297.7 at the end of that day. Since obviously this article was written, the market has risen even further above that. It's above 73. I know the S&P 500 in the US and the Dow are having nice increases. I think they've had 4 days in a row of increases. So the stock market's looking pretty healthy. It's heading back towards numbers that it's been hovering around, I guess, for a little while, but certainly looking pretty nice. And it goes into some of the particular stocks that have performed well the day before. But let's get down to the part that I think really has a bigger impact on your money management and your wealth creation. And it comes in this paragraph here where we're talking about the monthly CPI data showed inflation fell to 4.9%, so undershooting market expectations. And that would have obviously created some confidence in the market that inflation is falling. We're well off now the highs that we saw a few months ago. And the thing that this journalist points out, which I think, it's a comment from Craig Jones, a well-respected economic journalist, economist at ComSec, and he points out that if you look at what's happened to inflation over the last 3 to 4 months, and take an annualized view of what's happened in the last 3 months, we're at the top end of the RBA's target, the 3% target that they always talk about, 2 to 3% target. And so the monthly inflation, average it out, annualize it, and you're at around the 3% mark. So, if that continues, then obviously, we're going to be back down towards 3 very, very quickly with the annual number. And the thing that I want to point out about that's not written about in this article, but we can take from this article, when it comes to our own personal money management and wealth creation is that if inflation's coming down, that means the cost of living pressures should ease, and we might start hearing conversations about interest rate cuts. And I think the interesting is that we know from history that interest rate rises tend to overshoot the runway. I think the previous Reserve Bank governor, admitted that historically that's what's happened. The reserves tend to overshoot the runway. They get a little bit aggressive or conservative, whichever way you want to see it, in terms of trying to rein in inflation. And it's only once they see the impact of those rate rises that they can then decide if they've gone too far. And I think we're starting to see signs that absolutely those interest rate increases are having a massive impact. And I'm sure there's plenty of you that are listening to this who can attest to the impact that those interest rate rises are having. And so that should make money management a little easier, because we should see things like our groceries and other bits and pieces like that. We see the pressure on those prices start to ease, and that will bring competition back, and it will result in prices returning back to normal. That's not to say that some retailers will take advantage of these times to keep their prices at an increased level. But consumers are smart; they know how to shop around, and they will certainly let those retailers know if they think their prices are too high, and that competition leads to the prices falling again, and we're back to normalised pricing. So that we should see over coming months more and more easing in the cost of living pressure, which makes the household money plan a little easier to manage, and that should enable you to put more into your wealth planning and wealth construction um, accounts. So that's a good thing, and that's something that obviously we highly encourage people do, is really take heed of this opportunity and get that money working for you. So that's a really positive element that we can take from some of this data that's appearing in the news. And as you said, Craig James has said here in Good News for Borrowers, the latest inflation result means that potentially rate hikes are off the table. Well, certainly on hold for now, and more than likely we'll start hearing conversations about cuts to interest rates once that inflation number gets closer and closer to 3%. And if we start to see consumer spending really slow down, then that will flip the equation, and they're going to need to stimulate spending again. So it's always a juggle. It's always a scenario of pushing the right levers at the right time. And as I said earlier, the Reserve Bank has already admitted that they tend to overshoot the runway, and normally in both directions. So Harvey Norman's result due out Thursday. So yesterday, when you read this, today when I'm recording it. And that'll be an interesting number to see how that goes, because that will certainly give a good indication if their results are good, or if they underperform. That'll give an indication as to what that's saying about consumer spending as well. So that'll be interesting, and we might be able to have a look at that next week if it's significant. The other thing that I wanted to touch on is, particularly with this article, and this, you might see a little bit of a disconnect as to why I do these weekly wisdoms by looking at the media when I tell you not to look at the media. But this is one of the reasons why I tell you not to look at the media. And I want to touch on it again, and that is that, like I said before, the media is always looking for reasons why something happened. And if you constantly buy into that noise, you can get very distracted when it comes to making your investment decisions. So it's best not to try and understand what's driving the market one way or the other. You can have a high level view of where you think the market's going based on the general nature of what's happening, but trying to get into day to day understanding of what's driving the market will literally drive you mad and certainly won't improve your results. So, I talked this week about some of the predictions out there about the stock market going to crash. And since those predictions have come out, the markets have grown steadily for 4 to 5 days. So that doesn't necessarily mean that the crash is off the table, but it's always interesting to me when people come out with these predictions of a crash, and the market continues to go up. So it certainly leads to people um, procrastinating or avoiding the stock market because they're just so scared about what it's going to do. And my solution for that is to be consistent. Be consistent monthly investing. You'll get the ups, you'll get the downs, but ultimately over the long term, you'll get the gains that are going to fund your retirement. You've just got to be consistent. So um, keep that in mind and continue to invest on a monthly basis. And don't be put off when you see all these fancy headlines, which are just designed to draw you in and get you to read the article. So eyeballs means revenue, and we're about protecting our money and growing our wealth, not necessarily buying into a narrative that is designed to just get eyeballs on an article. And this is a pretty good example of that. ASX bounces higher after inflation eases. Well, that might be what happened, not necessarily why it happened. And if you start getting concerned about all these different things that are going to cause the market to go one way or the other, then, like I said, you'll do your head in, and it won't help grow your wealth or secure your money. So, hopefully that's helpful. Like I said, the good news in this article: inflation is easing. That's putting reduced pressure on the cost of living, which should free up more of your monthly money for investing in your financial future. If you want to know how to get started and you want help, then let us know. Reach out, leave a comment down below, send me a DM, get in touch however whatever is your favorite way, and we can organise to have a chat and see whether or not you're someone that we can help. We'd love to help. We've got lots of people doing great things at the moment, and we'd love you to be one of those as well. So reach out, and we can sort something out and get you growing your wealth and securing your financial future without having to worry about what's going on in the media or what's going on in the financial markets to know how to grow your wealth. We just avoid the noise and grow our wealth, and that's a simple premise, and one that we live and breed and teach. So have a great week. That's Woody's Weekly Wisdom, episode number 26. Do me a favor, if you're watching this on YouTube, hit the subscribe and the little bell for the notifications. And if you're watching it on Facebook, leave us a comment down below and hit the share, like, and comment buttons so that we can get more and more people learning and improving their financial literacy without having to rely on the noise they hear in the media. And that's what these are all about. Have a great week. I'll see you again next week. Great to be back with you, and looking forward to some more great things happening before the end of the year. And it's an important time to get started too. If you're worried about this year being wasted, let's get you started before that happens. Have a great week. See you again next week. Cheers.